Facebook, YouTube, what is going on, guys? What's happening? Hope you all are having a great day. Hey, good Thursday evening, late Thursday evening, guys. Wanted to hop on here really quickly. Man, big shout out to my Bears, who seem to be rounding out 4-1, just beat Brady and the Bucks. So just wanted to put that out there real quick. Good team win. Anyway, getting to the real subject at hand here. What is stop profits in Forex, guys? I want to talk about this really quickly. And that term, like stop profit, like some of you are probably like, yo, I never heard of that. What is a stop profit? And that's what I've become accustomed to calling it and learned it. And all it pretty much is, guys, is when you take your stop loss from a stop loss and you move it into profit. So just call it stop profit. So I could also word it, what is it? What does it mean to move your stop loss into profit? So obviously, real quick, a stop loss is if you're in a trade, if you don't know what a stop loss is, if you're in a trade and the trade goes against you and is going in the opposite direction of where you want it to go, your stop loss is what stops the trade and then minimizes how many pips you lost, which also minimizes the amount of money and the risk you've taken. So you might have as we call, let's say a 30 pip stop loss. And if you're risking, 3% of your account or whatever, you set the number where you wanted at, boom, you hit that 30 pips. Okay, that's your 3% you lost on that trade. Okay, so when trading, you obviously always want to set a stop loss, right? Even if some people do what's called a mental stop loss. If you don't have one physically in, you're more than likely watching your trade. You got a number where you want to stop it out at if it goes against you. So when a trade goes your direction, right, you will hear traders, you will hear educators. They will tell you to move your stop loss up into profit or at break even. Break even is moving it back to at the point of where you entered the trade. So you're going to break even on that trade, meaning you break even as like a draw. You didn't lose nothing. You didn't win anything. But from what I've been told, it's better to move your trade up into profit, even if it's a few pips, because now obviously you're not going to leave with no negative balance. You may have secured some type of profit, right? So when your trade is good and running, it's good to move a trade into stop profit, meaning now you have a guaranteed win. Like you cannot lose that trade. So if you're up, different people have different numbers depending on if you're scalping, if you're doing if you're intraday or trend trading, or if you are swing trading. It varies for everyone. And one thing you do, once that trade is at a level of profit that you like, let's say you're up, 10 to 15 pips in profit, you can then take your stop loss and move it into profit. 2 pips, whatever it may be. That's what I personally do from what I've been taught from one of my trading mentors, 2 pips in profit, right? Meaning now I've secured that trade. I have a risk-free trade, and I have now in my stop profit. Now, do I just leave it there? And the answer is it depends. It depends on me and how I feel about that pair and, the volatility of it or whatever. But as the trade continues to move up or down, whatever I'm in, if I'm buy or sell, as I continue to gain more pips on that trade, I can leave my stop profit where it's at. Or once the trade continues to move up, I can move my stop profit up even more. And a good thing to do is as the trade is going up, you will want to move your profits up to like where the previous level of support or resistance was at. So if you're in a buy, as the trade goes up, you want to move you're moving it up in profit. You're now what's called trailing your profits. You want to move your stop profit up to the previous lowest level of support right under it. So what'll happen at some point, that trade, as it continues to go up and up and up and up, if you're on a computer, you can do it where you have what's called a trail and stop, and it'll do it for you. It'll move it up. But on your phone, you have to manually do it, right? And as it's moving, as it continues to go up, you're going to now be in a position to where that trade, at some point, it will turn around. What goes up must come down. What goes down goes up. What is going down will go up eventually, right? So at some point, you're just going to keep moving that profit up, up, and up. And then boom, the trade is going to turn around and hit your profit. Now it's going to stop you out in profit, hence the term stop profit, right? So you have a risk-free trade. You've secured whatever amount of pips you are in profit, and now it's hit your stop profit point, okay? Which is great. Boom, risk-free trade, you won. Now, here's something with a stop profit that irks some people, and it irks me too sometimes, right? Let's say this is when you got to practice discipline, right? You have to practice discipline. Let's say you're in a trade. Let's say you're in a trade and you're up 10 to 15 pips in that trade, right? And I know, depending on certain pairs, I know it's a very good chance that trade is going to pull back. It's going to pull back, and more than likely it's going to pull back at a minimum to the entry area where I got in that trade at. Meaning, it's a good chance that trade may stop me out in profit, okay? May stop me out in profit. Hit 2 pip stop profit. Boom, now I'm knocked out of that trade. So sometimes this gets people leery. I was talking to one of my team members about this, and she's like, man, I keep getting stopped out in profit. I'm only getting like 1, 2 pips, whatever it may be. This is where trading discipline comes in, because some people won't move their stop loss into a stop profit because of the simple fact that they know. Sorry, I need to mute this out here. Give me 1 second, guys. Okay, they know for the simple fact that as they move that stop loss up, that they're not going to probably secure the amount of pips they want to secure, because they may have been going for 20, 30, 40 pips. And it's like, yo, okay, man, I'm up good 10, 15 pips in profit. Do I or don't I move my stop loss up into profit? And the reality is that's a personal decision you got to make. But at the end of the day, what I've learned is that you cannot go broke taking profits, right? You cannot go broke taking profits. I don't care what the amount of profit is, right? And it's all about perception. So because check it out. Let's say you have a smaller account, right? And if you're following your trading discipline, your numbers and what you do, is sometimes it's hard. I've been there. I know I've done it. And it's worked to my advantage. And sometimes I've kicked myself in the butt because I'm like, I should have moved my trade into profit. I should have moved it up into profit, right? And then what ends up happening, I'm thinking it's gonna just stop back at my entry point and then turn back and continue to go back down. But then sometimes it ends up doing what? It ends up going now and hitting my stop loss. Okay, so I went from where I could have had money in the bank to now I've lost that trade because I didn't practice the discipline of moving my trade from a stop loss into a stop profit. Okay. So it takes discipline. It takes structure. Trust me, I understand, because you're now in a situation where you think you know what's going to happen all the time. Like, oh, it's going to turn back around and go back and hit my 30 pip take profit. You don't know that for sure. So what happens is you got to have that discipline to say, okay, boom, I'm at my 10 to 15 pips. For me personally, I just picked my number. Once I hit 14 pips, I'm moving my stop loss up into a stop profit. Now, it happened to me today. I was twin trading. I was on Euro JPY, and what did it do? It went down like 20 something pips. Yeah, I could have closed out in profit, but I wanted my 30 pips. I was up like 20 some pips in profit. The trade pulled back and it went all the way and hit my 2 pip stop profit. So now at that point, right? Okay, I'm out of the trade, got my 2 pips, whatever, 4 pips, because it was 2 orders, got 4 pips. Okay, it's still a win, right? You can't go broke. Remember that. You can't go broke taking profits. So now here's the second half of that. Here's a decision that people make sometimes. Do you jump right back in that trade, seeing it hit your 2 pip stop profit? Now it stopped you out and it's put you back at your entry point. Do I go back in for a re-entry? And the answer for me is no. I've done it before and I've won, and I've done it before and I've lost. But the reality is, from what I've learned from my strategy and from my trading mentor, no, I do not just jump back in. And I didn't do it today. I didn't jump back in. You want to know why? Because I have no control. Yeah, it went back at the entry. A candle might have closed and it looked like it might be going down, but it might go back up and continue back on up to that stop loss, right? So why am I now throwing myself now? I'm like, I'm not following my trading discipline. I've knocked myself off my square. Okay. I won the trade. You just got to give yourself, I won the trade. I made money, but it wasn't what I wanted to make because it hit the stop profit. So part of me is like, jump back in. It's going to go back. And now you can go collect those 30 pips, walk away with still 60 pips. Boom, you're good. But I don't know that, because now what happened in the process of it hitting my stop profit, right? It went down based off the way I trade, right? It went down and now it made a new level of market structure. So now the smart thing for me to do is to go to where that level of market structure was at and it created a new zone. Now for me to remark up my charts right there. And if price does go back down, follows my trading plan of what I wanted to do, then that's a new place for me to get a new entry at. Okay. So that's the right thing for me to do. So, but for yourself, it's like, do you jump back in? I would say no, because you still won the trade. So don't jump right back in the trade, because you can't predict the market and you have no guarantee it's going to go back down. It could completely turn around and shoot the other direction. So that's why it's better to take some profits and no profit. Now, here's how you look at this: 2 pips. Let's say if you said a 2 pip stop profit, right? You might be like, man, 2 pips not nothing. 2 pips ain't nothing, right? If you look at it, if you have a $100 account, let's say you're doing 2 pips, 10 cents a pip, right? That's 20 cents. All right, man, 20 cents, that ain't nothing. Okay. $1,000 account, 2 pips, right? You're doing $1 a pip. It's 2 pips is $2, right? Okay. $2 ain't nothing. Some people looking at it. It's all about perception. You got to have foresight. You got to have vision. Now you're doing a $10,000 account. You collect 2 pips, $1 a pip. Okay, man. All right, I hit 2 pips. That's $20 I collected, right? $20. Let's say you got a $100,000 account, 2 pip stop profit, right? You're looking at $100 a pip, 2 pips. That's still $200, and so on. You get what I'm saying? So now, if you're looking at it, if you had, let's say you hypothetically had a $100,000 account, boom. Okay, you're going for 30 pips. You know, $100 per pip, 30 pips. That's what, is that $3 grand? I can't, no, 10 pips would be $3 grand. So yeah, that would be, I can't count. But anyway, I'm gonna do my numbers. So if you're doing 30 pips, 100, $100 a pip, right? $100 a pip times 30 pips. That's $3 grand, right? That would be $3 grand you would make on that one trade. But you say, okay, man, I make $3 grand if I get my 30 pips, but I got my 2 pip stop profit set. I walk away with 2 pips. I still walk away with $200. So are you going to throw $200 away? Or are you going to take that $200? That's still $200. Even if you hit a 2 pip stop profit on 5 trades in a row, right? At $100 a pip, that's still $1,000 you just made. So are you going to risk losing a potential $1,000, right? Because it's not what you wanted to hit of your bigger goal, and risk putting yourself in a position where if you got a 30 pip stop loss, you're going to lose $3 grand? No, you're not. You're going to take that $200 and get out of there. So it's about perception. So the same discipline you're carrying, if you had a $100,000 account, you got to carry that same trade discipline when you got a $100 account. Think about it. Okay. Think about it. It's the same thing. It's just as the numbers get bigger, it's still having the same discipline. So utilize your stop profits. I walk away with, even if you're on a $100 account, walk away and take your 20 cents versus losing $3, right? Oh, whatever numbers you're using. I'm just doing it based off of the way I trade, with starting out with a 1-to-1 ratio, right? 3% risk, 30 pips. That's my numbers. Those are my numbers. So you got to have that same psychology. Is just you having discipline for yourself. Because if you can't have discipline over you, if you can't have discipline in your trading when you have a $100 account, don't expect to have discipline in your trading when you have a $1,000 account. Don't expect to have discipline in your trading when you have a $10,000 account. Don't expect to have discipline in your trading when you have a $100,000 account. Don't expect to have discipline in your trading when you have $1 million account. Think about it. what's the difference? It's just you're growing, but you got to start growing where you're at, right? If you can't grow and handle $100, how the hell you think you're going to be able to handle $1 million? So discipline is important, and it carries over, and it starts out with the small things make the big difference. In trading, it does. The small things make the big difference. If you're not using stop losses, and if you're over leveraging and risking too much right now with the small account, and you're looking to grow and have big gains, and if you do, let's say you come into some money and you now throw 30 grand in the account. Let's say you throw 30 grand in the account. What's going to be the difference now when you had $300 in your account? What's going to change in your discipline? If you wasn't disciplined with 300, you're not going to be disciplined with 30,000. So start where you're at, wherever level you're at. Maybe you're coming in with 30, 50 grand. I don't know. But wherever you at, man, you got to have discipline. And part of discipline with trading is utilizing stop profits. When you go up, and if it goes back and hit it, so what? You live to trade another day, you still profited, and you cannot go broke taking profits. Remember that, guys. So I hope this was some value to somebody out there, man. I hope you understood what I was talking about, and you can utilize what I shared and get out there and go crush it in the markets and put yourself in a position to where you might be not using your stop profits and you're losing trades when you shouldn't be losing trades. Don't walk away from guaranteed money, no matter how much it is. All right, guys. So with that being said, man, listen, if you're looking to learn how to trade Forex, cryptocurrency, binary options, connect with me. I'd love to share with you the platform that I utilize. The link's right there, tradewithed.com. So with that being said, I will talk to you guys tomorrow. Have a great day, and get out there and crush it.